statements. Welcome to part 3 of financial statements of a company. In part 1 and part 2, I have discussed with you the statement, that is balance sheet statement, and its contents in detail. In part 3, we are going to learn something about statement of P&L. Let us start. Statement of P&L depicts the operating performance of the company during the accounting period. Schedule 3 part 2 has prescribed a vertical format for it. Let us go. You can see there, like as far as class 12 is concerned, we are restricted for these 7 items. First, revenue from operations. Second, other incomes. Third is total income, which will be the total of 1 and 2. That is total of revenue from operations and other incomes. Fourth is expenses. For expenses, you can see there I have marked with red, that is CPCEFDO. This is how I remember, CPCEFDO. C is for cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress and stock in trade. E is for employee benefit expenses, F is finance cost, D is depreciation and amortization expenses, and O is other expenses. Once you get the total of these 7 items from expenses, so you will have total expenses. And then the total expenses are to be deducted from total incomes. That will give you number 5, that is profit before tax. Once you have profit before tax, then you need to deduct the tax at the prescribed rate. And after that, you will get profit after tax. So statement of P&L for class 12 is restricted to these 7 items only. Let us go through these items in detail. The first one, revenue from operations. Revenue from operations refers to revenue earned from the business activities of the company, normal routine activities of the company. This item is shown in notes as sale of products, sale of services, and other operating revenue, that is sale of scrap. So whenever you have to go through the items, or you just want to know which items are included under this head, revenue from operations, you have these 3: sale of products, sale of services, and sale of scrap. Other income. Other income refers to income earned from sources other than its business activities. Other than revenue from operations will be classified as other incomes. Let us see what is classified under this head. Number 1, interest income, dividend income, net gain on sale of investments, profit on sale of fixed assets. So these are the other incomes. Next is expenses. In expenses, I told you the format, that is CPCEFDO. 7 items are there. Let us discuss these 7 items one by one. First one is cost of material consumed. Now, cost of material consumed basically is a term used for manufacturing companies. It will show the raw material, the consumption of raw material. And to find the consumption of raw material, the very simple formula can be seen, that is opening stock plus purchases minus closing stock. Second item under expenses is purchase of stock in trade. This term is used for trading companies. This refers to goods purchased for the purpose of sales. Next heading under expenses is changes in inventories. When you talk about inventories, it will include the work in progress, finished goods, and stock in trade. We are going to have the change over here. So for that, we need to calculate the difference between the opening and the closing stock of work in progress, finished goods, and stock in trade. Next is employees benefit expenses. D part, CPCE, employees benefit expenses. This term includes the following expenses. Number 1, salaries and wages, leave encashment, any amount related to workers and employees, contribution to provident fund and other funds, staff welfare expenses. Next is financial cost. Financial cost, it includes interest expenses, other borrowing cost, net gain or loss on foreign currency transactions, discount or loss on issue of debentures. These four are the contents of financial cost. It will include the interest on short-term borrowing as well as long-term borrowing. Next is depreciation and amortization expenses. Under depreciation and amortization expenses, we know like depreciation is charged on fixed assets, that is tangible, while intangible assets are amortized. Any reduction in value of intangible assets will be the amortization of intangible assets. Next is other expenses. The expenses which are not classified under any other above heads will be classified over here. This is again classified into three categories. Let us see other expenses. First category under this head is direct expenses. Direct expenses like consumption of stores and space part, power and fuel, carriage, freight, etc. After direct expenses, we have operating expenses. Operating expenses are the routine expenses. Routine expenses like rent, printing and stationery, postage and call, repairs to building, repairs to machinery, insurance, rates and taxes. After that, the third category is non-operating expenses. Under this head, we can see there it's a loss on sale of investments or loss on sale of fixed assets. So, 7 items were there under expenses C, P, C, E, F, D, O. All the 7 items, including their contents, have been discussed. Next is, let us go through some important relationship of items of statement of P&L. Net revenue from operations. All these items will be very useful to you while solving the sums of the chapter ratio analysis. Net revenue from operations means whatever the revenue from operation is there, from there you need to deduct the revenue from operations written. Or in simple words, sales minus sales written is net sales. Same way over here, net revenue from operations is equal to gross revenue from operations minus revenue from operations written. The second important formula is to calculate COGS, that is cost of revenue from operations. This COGS is equal to cost of material consumed, purchase of stock in trade, changes in inventories, plus direct expenses. These are the amounts included in cost of revenue from operations. Is direct expenses. Let us see what is all included in direct expenses. The first amount you can see that it's wages and provident fund contribution. This is actually a part of employees benefit expenses, but we need to make sure that when you talk about direct expenses, you include the expenses which are related to workers. Wages are paid to workers and any provident fund contribution is related to workers, so that amount needs to be included under direct expenses. Fuel and power, carriage inwards, cartage, factory rent, manufacturing expenses, etc. These all are the contents of these other expenses, but because these are direct expenses, we should take care. As I told you earlier, these all things will be very useful for solving the sums in the chapter ratios. Next is operating expenses. We all know that operating expenses are the routine expenses of the company. Let us see what is included in this. You can see there salary and PF contribution. Now this is again a part of employees benefit expenses, but over here when you talk about salary, so you have to take into consideration the employees only, not the workers, because any amount related to workers will be considered as direct expense. Interest on short-term loans is a part of the finance cost, but you have to understand that key finance cost includes the interest on short-term and the long-term loans. So any interest on short-term loans will be my operating expense, and interest on long-term loans will be my non-operating expenses. Depreciation and amortization is also a part of operating expenses. And then the routine expenses of the company: rent, printing and stationery, postage and call, repairs, insurance, rates and taxes, selling and distribution expenses, etc. These all are the part of other expenses. Next in row is non-operating expenses. Non-operating expenses will include interest on long-term borrowings and other borrowing cost. As I have told you earlier also, interest on short-term is operating, but interest on long-term borrowing will be my non-operating expenses. Loss on sale of investments or fixed assets is also a part of non-expenses. Non-operating incomes, the incomes which are not earned by the company in its routine operations. This is interest on investments, dividend received, gain on sale of investments or fixed assets, rent received. Next is other operating incomes, the routine incomes but are apart from like the revenue from operations. It can be commission received, it can be provision for discount on credit. How do you calculate gross profit? A very simple formula, that is revenue from operations minus cost of revenue from operations, or in simple words we can write it as net sales minus COGS. The formula for operating profit: gross profit plus other operating incomes minus operating expenses. Please take care, whenever you need to calculate operating profit, you just need to exclude non-operating items, whether it is income or expense. Net profit after tax. If you have to calculate net profit after tax, how do you calculate that? Gross profit plus other incomes minus indirect expenses and losses and minus provision for tax. Because you are calculating profit after tax, so provision for tax has to be deducted. And do remember that at the time of calculation of net profit, you have to ensure to include all incomes and deduct all expenses, whether operating or non-operating. Now let us discuss something about the users of financial statements, or which are the parties interested in the financial statements and what is their objective. Discuss one by one. Shareholders and the potential investors. We all know that shareholders are the owners of the company, and that is why they are basically exposed to every type of risk. They are interested in knowing the profitability position of the company, return on capital employed, safety of their investments and growth potential in future. Then only they would like to continue with the company. If they just find that the company is not doing good, they may look for disinvestment and try to invest in better prospects. Debenture holders, bankers, financial institutions and lenders. These are the parties from where the company borrows the funds. So basically these are the lenders. Lenders are also interested in long-term solvency to ensure the safety of their debt and short-term solvency of the company to ensure the ability of the business to pay interest payment in the short term on regular basis. Long term as well as short term. In the long term, they need to ensure that they will be refunded the amount, as well as short term, just to ensure that to the ability of the company to pay the interest in the short term. Creditors or suppliers, they are also interested in getting their payment as and when it becomes due. So they are more interested in the short-term solvency position of the enterprise. Next, customers. Being customer, they are also interested in the financial statements just because they want to ensure that this company is going to continue its operations in the near future. The reason is very clear. If they are thinking of winding up the company, then as a customer, they would like to find the alternate source of supply of goods. Management is also interested in the financial performance and soundness of the enterprise. It has to deal with the management of cash, trade receivables, trade payables, inventory, fixed assets, capital structure, etc. Employees and trade unions are also interested about the financial position of the enterprise so that it may pay salary to employees in time, ability of the company to pay bonus, and ability to deposit provident fund contribution in time and to give promotion, etc. Employees always look for the regular salaries, bonus, and they also want to ensure that the company has been depositing the required amount of PF with the government. Next is government and other agencies. Various government departments like income tax, sales tax, excise department are interested in collection of various types of taxes. This will be possible only when the growth of the company is satisfactory over the period of stock exchange also is interested in the financial statements or uses the financial statements to find out the profitability position and the financial health of the company. That's all for part 3 of financial statements. I'm sure I have tried my best to make you understand the concept of financial statements, balance sheet and statement of P&L and the parties interested in the financial statements of the company. What is their objective and all. Thank you so much once again. Do not forget to share, like and subscribe my channel. God bless you all.